Hi everyone, welcome to another episode of my video, and today is the 5th of January. I just want to discuss about how do we roll a losing position or a position that is against us when we are selling a put option. And today I'm going to talk about this Roku trade that I have. I actually opened this trade yesterday, which is the 4th of January, and I sell a 310 put for $3.15, and right now Roku is at 317.90, and that is yesterday closing price. The market has not opened now, so when the market open, I'm planning to roll this trade to next week at the lower strike. And if we take a look at the Roku chart, we switch this over to a daily chart. The high was actually 363, and right now it's at about 318, and that is about 15 to 20% off the high, and which is why, or one of the reasons that I entered into this trade. And when I entered the trade yesterday, it was about 330. So I decided to sell a 310 put that expired this Friday. Unfortunately, the Roku went down yesterday, so I'm thinking of doing a adjustment today. And because the market has not opened, let me just go through a little bit about why do we want to roll a trade. So I'll just do a quick presentation. Rolling a losing position and rolling down and out, and that is my Roku trade that is going against me. Why do we roll? We roll when the market is against us. We may still want to be assigned the share, but we want a better price. Because right now I have a 310 put. If I manage to roll it down to 300, and if I'm assigned, instead of buying the Roku at 310, I can buy it at 300, which is a better price. Or another reason is we want to give more time for the trade to work out. And the most common reason is we don't really want to be assigned, and we do not want to take a loss, and want to give the stock a chance to recover. That's why we roll. So for this Roku trade, I have sold to open a 310 put at 315 yesterday. So for today, 5th of January, I plan to close out this 310 put and sell to open next week, which is lower than 310, because I do not want to go back to the same strike. I want to give the market a chance to recover. And I'll be rolling out for a credit. What happens if I do not roll? If I do not roll and Roku has gone up, the put will expire and we free up our margin. What happened when the Roku went down? We'll be assigned the stock and we'll need 31,000, because Roku put that I sell is 310 and multiply by 100. Then I will need 31,000 to hold the position. Even if I'm using a margin account, I will still need 15,500 to hold the position. And if that is the scenario, I will turn around and sell a call to average down my buying price. The benefit of rolling, as I mentioned earlier, we will be buying the stock at a lower price should we be assigned. We all love to buy low, right? And if we are able to roll down a few times, instead of buying at 310, we probably can buy it at 300 or 290. That is even a better price. And we give the market some time to settle down. Rolling down means we are selling at the lower strike, and there's a good chance that we will never be assigned. And that is the most common reason to roll a trade when it is against us, because sometimes we don't want to be assigned. Now, should we always roll the trade? Not really. When you roll down a position, you remove the risk temporarily and you lose all the upside gain potential. If you believe the stock has reached a bottom and reached a comfortable level that you can accept, you should take over the stock and sell a call further out to capitalize on a capital appreciation. So this is my Roku Trade at the moment. 4th of January, I sell to open a 310 put that expire 5 days, which is the 8th of January for 3.15. And today, 5th of January, I'll buy to close the put, and depending on what price. And we'll take a look at the market. The market have another 30 seconds to open, and if the Roku is below 320, I actually wanted to roll. But if Roku is above 320, I will probably give it a chance. So let's see. The market is most likely going to open above 320 because right now looking at the bid and ask, this is 321 and 321. So now the market open, and Roku actually did open at 320. And let's take a look at my position right now. The price that I sell is 315, and right now the market price for this 310 put is about 375 or $4, and that is about $85 loss for me. And right now the Roku trade is actually going up, and Roku is right now at 325. So I don't think I need to roll this position. But should the market come down tomorrow or the next day to below 320, I will most likely roll the position. I actually did intend to roll, but because the market just opened up, so I won't be rolling this trade. And in another video, I'll probably be showing you another trade on how do we roll a position that is against us and the option is already deep in the money. And we'll talk about that when I'm about to roll that position. So for now, I don't think I have a trade for Roku. I just want to complete this video because Roku has actually go up today by $12. So the position is not against me and I don't have to roll the trade. And right now, in fact, Roku has a open profit of $94 if I were to close out now. But for me to actually do a rolling, I'll be closing out this trade that expired on the 8th of January. Let's assume I wanted to do a roll, then I will have to close out this trade at about 210, looking at the bid and ask. So I'll be closing out this trade at $2.10, and this is a 310 put. What I will do is I actually will look to sell to open next week expiry, which is the 15th of January, and I'll be selling it at $2.10 and higher because I want to collect a credit for my effort of rolling down. So most likely I'll be looking at maybe the 300 strike or the 295 strike. If I were to roll down to the 300 strike, then I can sell it for about 365 minus away the $2.10 that I pay to close out. I have another $1.50 for the effort of rolling down. And that is actually how we roll down a trade. And if you want to play safe, then we can roll down even further to 295 or 290. But if you are going to roll down to 290, then you are looking to sell this 290 put option at $2.20. That is about break even. That means you roll down for break even. But rolling down to break even will means that now the market would have to drop below 220 for it to be against you. and you have a better buffer than 300 or 295. So which strike to roll out is depending on comfortable level. And for me, I will most probably be considering 300 or 295. But anyway, because Roku has gone up and I'm not rolling the position for today. And thank you for watching the video. And if you like, please subscribe and like my video. Thank you.